everybody. Welcome to another episode of the Shut Up and Do It podcast, place where you can come and hang out with us while we bring you all things real estate and business and life related, while hanging out with top quality speakers, all who believe in a get it done manner. I'm your host, Nick Allerud, creator of the Complete Deal Flow System and principal with the AA Real Estate Group, a Greater Boston home buyer and multifamily portfolio collector up and down the East Coast. And we have another local celebrity today that we're very happy to have on the show. Mr. Mandrell is on today to share with us some really cool themes as to what he has done in his real estate business. He's a self-made multi-millionaire based in the Boston area. He's a broker, coach, lecturer, and author of a book called Cash Flow Secrets. He's been involved with well over $200 million in real estate transactions throughout the years, and he's been featured in numerous trade magazines and is a frequent guest of other podcasts and wealth-related television, radio shows, and that sort of thing. So I'm not going to say any more about him because he's ultimately amazing. And Willie, we're so happy to have you on the show today. Thanks for being on.
Thanks, Nick. Thanks for having me on. Celebrity and amazing. I appreciate all that.
Hey, you know, dude, show us your book. Show us the book in the back.
Sure, absolutely.
I know from personal experience how hard it is to write a book. Check this book out.
Absolutely. It's coming out, September 24th. I'm offering pre-sales right now. It's realwealthbooks.com. I got this one and a couple more to follow. During our downtime, during the pandemic, I just started getting up real early and just kind of just documenting everything I was doing and just writing nonstop. And what I thought was going to be one book actually turned into three. So I kind of broke it up, and Cash Flow Secrets is the first of the series. Kind of takes you through kind of that number one purchase to kind of getting to 10 units, so to speak, kind of taking you through all the conventional financing, the FHAs, and that kind of beginning, starting to become a landlord. And then the second book is the business secrets. It'll kind of take you through building that portfolio. And then Wealth Secrets brings it back home and just says, your stock portfolio, your self-directed IRAs, and all that other good stuff. And, that we'll probably get into.
And pause, because that's perfect. Usually we don't start with a plug, but I saw the book and I knew you had to talk about it.
Sure.
No. Now we're going to go back, and I want to know the story of Willie, right? I want to know the story of how you started and kind of where you went in your own journey. And we'll kind of get into it deeper and deeper as we go.
Yep, sure. So 2006, I'm 23 years old, fresh out of college. My wife's a couple years behind me. She's still in college, both of us at Northeastern here in Boston. And my grandmother had been in the business for years, real estate investor, kind of skipped a generation. My uncle and my father didn't want anything to do with the business, but she encouraged me and pushed me to kind of go into the multifamily business. When I wanted to buy my first house, I wanted a condo. I wanted that easy lifestyle, the swimming pool. Somebody else is cutting my grass for me and all that other good things that come with a condo association fee. And she said, no, trust me, go out and buy the multifamily. And it was kind of the best thing I did. It was kind of the worst thing I did at the time and the best thing I did long term. The worst thing I did, I say, because in 2006, great time to buy. We just didn't know that in 2007, we'd have, a stock market crash followed by a housing market crash in 2008. The property that I purchased, roughly $400,000 here, and right outside Boston in the Quincy area, was probably worth $320,000 or maybe a little bit more, $330,000 at the low, maybe 2009, 2010, somewhere around there. So that's how I got started. I mean, most people get, that first FHA loan, low down payment, especially here in the Northeast, prices are so high. Bought that first two-family, fell in love with the business despite the challenges of the market. Someone else was paying 65% of my mortgage and kind of leaving me with a very small nut to pay after it was all said and done. And the thing that I loved about it was, I was getting, you see, during 2008, 9, 10, 11, a lot of people were getting foreclosed on, having financial troubles. And the reason I was able to survive was because I listened to grandma and bought that multifamily and had someone else paying a good majority of my mortgage off.
That's fantastic. So if you go back even before any of that, so what made you interested in real estate to begin with beforehand? Was it your family advice?
It was a little bit. I mean, she had always been in the business and she kind of showed me the work side of it, the effort side of it. But I think my second or third year in college, I took my first economics course. I think it was macro or microeconomics. But we talked about inflation. We talked about purchasing power. And if you know anything about inflation and everything else, and the price of goods, milk is more than it was yesterday, and it will be more 10 years from now than it is today. And the cost of goods are going up slowly. And if I looked at that and I said, well, I also have to get an annual increase to keep up with the cost of inflation, a cost of living increase. Most people are not receiving that cost of living increase annually. And even if you are, that means all you're doing is breaking even each year. If you get a 3% raise every single year on your salary, you're most likely just keeping pace with the rate of inflation. So when I heard that in economics, I said, well, how do I beat this? How do you overcome this and actually become wealthy? And well, you have to invest. You have to actually outpace inflation. So you have to get not only 3% on your money, but 6 or 7 or 10 or 12. So if you understand that, then you start looking at your investment options. And if you start looking at investment options, you say it's the stock market, it's real estate, it's gold, it's antiques, it's artwork. And you look at that realistically and you say, I mean, it's big money to invest in art and antiques and stuff like that. So my best options are the stock market and real estate. Well, I'm a control freak. Stock market doesn't do it for me, right? I mean, the stock market is great because a lot of people, you can make a lot of money there. And if you know what you're doing, you can do. I've done all the fundamental analysis and the technical analysis and all this other stuff. I had my Series 7 and my stock trading license and my options trading license. I'd done all that. And I still didn't feel like I was in control. At the end of the day, you can invest in Facebook stock or Amazon stock, but if Mark Zuckerberg is cooking the books, you really don't have any control. Real estate gives me that control. I can manage it. I can improve it. I can select my tenants. It gives me a tangible asset that I can invest in. And that's really what it came down to at the end of the day. You couple that financial knowledge with the backing and the support from my grandparents. And, that's probably where I am today.
It's really interesting. So you just mentioned all that, and a lot of listeners here, you and I literally came from very similar backgrounds, and we're pretty much the same age, right? The finance background. And you and I both came to the exact same conclusion after being through finance, or at least finance training, right?
Right. And again, throughout college, I can still say today, micro and macroeconomics were my favorite courses because it's just the study of money. It's the flow through the economy. It's how the Federal Reserve Bank works. It's how inflation and purchasing power, those were my two favorite courses because that made sense to me. I grew up rather poor, and the study of money has always been interesting me. How do you make it? How do other people with it keep it? How do they make more from it? So that was always extremely interesting to me.
For sure. I'm reading, not to go on a tangent, but it's funny because I'm reading my kids, 6 and 4 years old. There's a book called The Creature from Jekyll Island. It's a Tuttle Twins book, and it's all about like 12 and a 10-year-old that are trying to set up their own business, but they overhear their father and their grandfather saying, oh, it's that creature from Jekyll Island. And basically it's the Federal Reserve that just keeps printing money and making the inflation go up. So it's all about them like ruining society. So anyway. I love it.
And that's great. I mean, like I said, my kids are a little bit younger than yours. We're 1 and 3. But we're going to start, headed down that path as well, so I have them in the office as much as possible. And, hopefully what I would love to see is one of them reading one of my books one day at some point in the future. So
that's it. That'll be a whole other topic because I need some training on that, man, on how to be a better father.
Yeah. Believe me, I understand. I tell people this all the time. If you know me, I've said it before. Relationship advice, I'm not your guy. Being a good father, probably not your guy. I understand money, and that's probably it, so.
So part of all this and your journey, and it's funny because we literally both have taken kind of separate paths, but have ended up in very similar places, right? With portfolio building and, maybe some fix and flip and that sort of thing. Tell us about how your business looks today, and then we're going to get into kind of the dynamics as to how you got there and even maybe a struggle or two that you faced along the way.
Yeah, sure. So got out of school and, I had my finance degree, went into the securities industry, stocks, bonds, mutual funds. I was in compliance. So I was basically going out to random stockbrokers' offices and telling them what they were doing wrong and, that they shouldn't be ripping off clients and stuff like that. So had all those licenses, understood the market really well.
The Debbie Downer of the stock.
Absolutely. I mean, most of the guys did not want to see me when I was coming into their office. The company I was working for it was a great company though. I had corporate credit card traveling all over the country, though they never sent me to any of the cool places. I never got to go to the San Diego office or the Hawaii office. I was always like in the backwoods of like Virginia or Mississippi or something like that. But that's beside the point. So was in corporate for a long time. And then I think my wife and I had 8 units between us. And when I think it was 2010, 2011, I really just wanted to just immerse myself in the real estate business. Things were going, badly in the stock market. Things were going badly throughout the country. And my thought process was, whether it was, right or wrong, I was like, hey, if I just dive into real estate, just go, head first in. If I fail, I can just blame it on the economy like everybody else is doing, right? I mean, I lost my job and everybody's kind of having a bad time right now. But I didn't. I got in. I suffered those first couple of years. I got my real estate license, my salesperson's license, sold for a couple of years, struggled, and then had some success in year 3, year 4, year 5, and then decided to open up my own brokerage, which I still have today. It's the Mandrell company. So I'm a broker. And then a couple of years ago, I still was kind of buying properties, but the pace at which I was buying wasn't quickly enough for me. I saw my financial freedom number on the horizon and I wanted to get there a little bit sooner. So we still own the brokerage, but that is no longer kind of the focus. It's building the portfolio, buying these cash flow rentals in Boston. We're about 40, 45 units right now. The goal is somewhere around 60. And like I said, we're trying to get there in the next couple of years, if that answers your question.
Brilliant. Yeah. Only because you mentioned now financial freedom number, which I love too.
Yeah.
You had a number that you came to, right? That was essentially, you want to discuss that for people who don't know what that is?
Sure. So basically, and this is, Robert Kiyosaki, love him, dislike him, whatever, great author, especially in the financial freedom side. I read Rich Dad, Poor Dad. And then the book that really kind of changed it for me was Retire Young, Retire Rich. I think it's second or third one in the series. And basically what he describes in that book is your financial freedom number. It's what is your ideal lifestyle? I know I'm going to throw some numbers out there and this may make sense to some people. And this is not the way we're living right now. But my wife and I basically sat down and said, well, if we have, a beautiful home and 2 nice cars and our kids are able to go to the, the daycares and private schools that they want to, if that's what we want, we're able to take 2 nice vacations and we're able to save 15 to 20% of our income and, put this much money away for retirement and take care of her parents and take care of my parents. What does that equate to? What is that ideal lifestyle? Though we're not living it right now, where do we want to get to in terms of income monthly and annually? The number that we came up with was $250,000. That is a comfortable lifestyle for us at $250,000. So financial freedom is essentially saying, if she makes $125 and I make $125, that's good. We're hitting our $250,000 number, but that's not freedom. That means if she loses her job, that means 50% of our income is gone and we're no longer living that lifestyle. If I lose my job or if I take a hit, financial freedom is when we're making enough passive income, enough cash flow coming in from these rental properties where we're not necessarily working for that money. Somebody else is, providing us with that income through rentals or through the stock market or wherever. So we basically said, how do we get to $250,000 in passive income and we're essentially financially free at that point. And we basically just did the math out. And we basically said, well, if we're cash flowing about $1,000 a building and we own 20 buildings, that's $20,000 a month times 12 months is $240,000, just short of our $250,000 number. And that's essentially what you're shooting for, is that 60 units, roughly, 20 rentals, about $1,000 a month, $240,000 for the year. And then hopefully we can make some adjustments and make it up for that last $10,000, if that makes sense.
There it is. And you just outlaid that math again. So can you just go over if you're comfortable going over your buy criteria for that right now, just to kind of go over that cash flow again per unit?
Yeah.
So people understand that.
Yeah, so I'm looking for units that basically are generating, and again, I said $1,000 a building, and I'm saying that because I'm assuming that we're going to perform under where I'm targeting, right? But I'm typically looking for about $500 to $700 a door. So if I'm buying a 3-family, which is the bulk of my portfolio, I'm probably not going to look at a 3-family that's not performing with at least, $1,500 to $2,100 per month of cash flow after my down payment and expenses and mortgage payment and everything else is paid. If that
this is cash flow. So for those of you listening, this is not gross income. This isn't $500 a unit coming in. This is net $500 a month, right? So
after all my expenses are paid, the mortgage is paid, the taxes, insurance, the water bill is paid, my maintenance is paid, the property management fee comes out. For those of you in the Northeast or Boston, if you know the numbers, I'm looking for, an ideal, the multifamily that comes out and let's say rents are $2,500. I'm looking for buildings and it's a 3-family, so I'm collecting roughly $7,500. If I can get out with expenses roughly somewhere around $5,000 to $5,500, that's a good deal for me, and I'm probably going to go ahead and make that purchase.
And that includes debt service, roughly.
Includes debt service and everything.
What would you be roughly in for on the equity side for something like that, to buy a 3-family that's cash flowing at that amount? Like what? purchase price and rehab?
Good question. So if you're brand new to the business, in order to do something like that, you're probably going to need 20 to 25% down. I don't buy like that anymore. I'm very familiar with the construction process. So my target purchase now is something that needs an extensive amount of work. I'm looking to do the BRRRR strategy, the buy, rehab, rent and refinance, and pull cash right back out. So it gets a little bit more complex when you get to a certain level, but I'm using, let's say I'm borrowing $100,000 from Nick, using that as a down payment on my purchase on, let's call it a $500,000 purchase of a 3-family. And I know most of you are listening, probably saying, well, where the hell are you getting $500,000 3-families? They're just not available. How old is this podcast episode? No, they're still available. They're just dilapidated properties. They're just the ones that need windows. The heating systems are broken. The roof is leaking. The plumbing is bad. The electrical is bad. And what I'm doing is I'm buying them at $500,000, putting $250,000 into them that I'm getting from the bank. So I'm into it for $750,000. And at the end of the day, the property is probably worth $1 million. And that's what I'm taking a property that's in really bad shape, putting $250,000 into it, fixing it all up, maximizing the rents, and then going back to the bank and saying, now that it's worth $1 million, I want to pull all my capital back out. And that $150,000 that I borrowed from Nick is coming right back at him with an interest rate 6 months to 9 months later. And that's how I'm able to kind of turn and build that portfolio. If I had to save up 20 to 25% every single time I wanted to buy one, I'd be better off probably going back to corporate America and kind of maximizing my income there.
For sure. That's the nuts and bolts. And thank you for that, Willie, because you dug in deep here for that one. Dug in real deep. So first, I want to ask you a couple like almost challenging questions. So number one would be passive investment, right? Financial Freedom Number, Kiyosaki, Rentals Are Passive. We love that book.
Yep.
Now I want to ask you and me, you as your own, I don't know if you actually manage your own, do you have your own management company?
I do. I mean, I've been asked this question a bunch and I need to get away from it. I've said that 100 times already, but again, I did mention that I'm a control freak and I live by that. So, I mean, I still, brother. You and me both. I've hired other property management companies. I've hired 2 other property management companies, and in 2 separate situations, I had to take the management back because I believe that management is where you really make your money. If you're managing your properties well and tenants love you and they're paying you, you're going to make money. And so I think it's really important. The plan is probably to hire an in-house property manager to help me with the day-to-day, the physical aspects of it. But to answer your question, yes, I still do manage my own property.
Gotcha. No, and it's brilliant. Thank you for being honest about it, because we followed the exact same path. Kiyosaki in his book said, oh, rentals are passive. Rentals are passive. We're like, yeah, I want to follow the passive income dream. And then you buy these rentals, you're like, taking calls, and all of a sudden like a roof goes, and all of a sudden a boiler goes. You're like, where did all my money go? Like, where's all this cash flow that they promised me?
Right.
But 100%, you nailed it where you just said the money is made in the management. First, you got to buy right, then you got to construct it right? Then you got to pull it out right, finance it right, and then you got to manage it right. And it's funny because passively, you and I have both come to the same conclusion where, all right, we can't hire a third party because we're just, it's not working. So we've tried to set up systems, right? Systems and processes to help manage our own portfolios. But I'm curious because I'm facing, similar challenge where I'm on this journey and I, can't call my rentals passive yet. And I didn't know how you are.
That's fair. No, that is true. It's not entirely passive. I would argue that it's still a lot more passive than, I bet, probably not spending 40 hours a week on them, I guess is the real question. I'm probably still making more money and working less than I was in corporate, but you're absolutely right. It's not entirely passive, but that's what I'm still working towards, is still putting those systems in place. And when I say systems, for those of you not familiar, the E-Myth is a great book on building systems, building processes. And I used to work at McDonald's when I was 15, 16 years old. And I understood that it only took them 3 days to train me. And the reason people are like, well, the job is really simple. It's you just flip a burger. No, that's not the reason. The reason is because they have a manual that you get from day one that they hand you and say, this is exactly the amount of time that when you drop the fries down, it come up 15, 20 seconds or 2 minutes later, or whatever, you flip the burger after 15 seconds, it is exactly 2 swirls of ketchup on the burger. And that's how you get consistency. So what we're trying to do in our business is basically create those systems and processes by finding the perfect way to do something, the perfect time to answer a tenant call, the perfect response, the perfect way to collect rents, and everything that goes along with property management, put that into a system, document it, and then eventually being able to hand it off to somebody else. So that's what I'm in the process of now, is hiring a bunch of virtual assistants, hiring some people to take small tasks off of my hands, answering the phones, doing the books, little stuff like that, and hopefully building out my version of McDonald's on the property management and rental side. So it will hopefully one day be completely passive.
Brilliant. Great answer to that question. So you and I are on that journey together, my friend.
Yeah, it's definitely a journey.
Let's talk about one of the topics too that we were going to talk about today. Why do you feel being a millionaire is not enough, and what should we be shooting for?
Oh, that's a good question. So being a millionaire, and I've calculated this, and again, to get kind of deep, and hopefully, like I said, my family's not offended by any things that I say on these podcasts. My grandmother had it really well. My father, took his own path, left at a very young age. I was raised by my mother, and my mother and my grandmother didn't really get along. So when I tell the story about my grandmother and how well off she was, that people would think that I was somehow, it translated over and I was somehow handed a lifestyle or something. That's not necessarily the case. They didn't really get along. So my mother, we bounced from shelter to public housing here and there. So I'm, fascinated by money. I'm, how do I get it? How do I achieve it? How do I keep it? How other people are doing it. So in the study of kind of, money, I've done this calculation 100 times. And I said, if I can just become a millionaire, that'd be awesome. I'd never have to do anything again. And I just want to become a millionaire. And then you do the math out and you say, well, let's say you're retiring at 60 or 65. And I saw this through the recession in 2006 and 2007, 8, 9 as well. Let's say hypothetically you had $1 million in your 401k. You've been saving up for 25 years, 30 years, and you had $1 million in your 401k at the time of 2007. The stock market crashes and a lot of people, retirement accounts were cut by 30, 40%. So let's say your $1 million is now 600,000. I mean, that's devastating in itself. What you thought was going to be, a comfortable retirement for $1 million is now not, and it's cut. So that's number one reason why just having $1 million is not enough. But then if you really do out the math and you say, let's say that the stock market doesn't crash at all, and you have that $1 million bucks, and you say, okay, now I'm going to retire. Well, there were a couple of questions that were asked to me early on. One is, do you spend more money during the week or on the weekends? And I answered immediately, of course, you spend more money on the weekends. You're out, you're doing things and everything else. Well, the question was then asked, well, once you retire, isn't every day a weekend? And I said, well, yeah. So then then you're going to be spending more money on the weekends. So what you thought was a $50,000 lifestyle is not going to be a $50,000 lifestyle. You're traveling, you're doing things, you're golfing, you're doing whatever you want to do, and you're taking the grandkids out or whatever. So my point is, if you have $1 million and you live a $50,000 lifestyle, then two problems. One is you only have about 20 years of living. So you're probably going to outlive your money really, really quickly. Two is you're probably not going to stay with a $50,000 lifestyle. You have to stay in the market. You have to continue to achieve a rate of return on that. And there's just a lot of problems with it. $1 million is just not enough. You're not going to be able to save your way to retirement throughout the math. If you do the math and you do your calculations, I even tried $2 million and there's still a lot of problems with $2 million. The only real way that I found to do this is to create passive income, create streams of income for yourself that continue to pay you into retirement. So you're still making money in retirement versus just trying to save your way to a goal and then trying to live off of that money. I think it's a failed plan all day long.
For sure.
And I apologize. I know I was really just kind of looping around there, but hopefully that makes sense to people. The goal should be to create passive streams of income for yourself versus trying to save.
Perfect. Perfectly worded. Did you get hurt in 07 and 08?
I was young. I was early 20s. So, yes. Like I said, I was, I saved up a bunch of money. I remember I was working 3 jobs at one point, and saved up a bunch of money to kind of put down on my first property. And it pretty much evaporated with a whole bunch of money. So I would say, yes, I was hurting, but not like someone who was planning on retiring in 2007, 2008. Though if I was 50 or 60 or 70, I think I'd be in a much tougher situation. I was 23, 24, 25 during those years. So I had plenty of time to recover. And that recession taught me how to prepare for future recessions. And one of the things that you learn in economics is the economy works in cycles. 2008 wasn't an anomaly. It happened before, and it's going to happen again. Whether because of a virus or because of a housing market flub, it's going to happen, right? If we're roughly the same age, you and I are probably going to live through 3 or 4 more market downturns. And what 2006, 2007 taught me is that you don't run from those. The downturns create opportunities. The downturns are when millionaires are actually made, because while everybody else is running scared, you're actually running towards opportunity, right? Those people who are, again, not to sound insensitive, but getting foreclosed on and having trouble and selling off at low values, while I was actually buying and picking them up all up during the upswing. Those properties I were buying in 2012 are probably double the market value they are today. I mean, in 8 years, they have definitely doubled in value. So to answer your question, yes, not as bad as some other people, but I wouldn't change a thing because it taught me a lot about market swings. The people that started investing in 2014, 2015 know nothing but good times right now. The people that started investing prior to 2007, 2008 understand market cycles. So I don't regret it at all.
Amen, brother. I even call it a home run complex. People who started in 2015, 2016 and have been riding the market. They can make mistakes in construction. They can make mistakes in hiring the wrong tenants. They can make mistakes in not managing effectively, and they're still okay. And they're like, anybody can do this.
The market solved it for them. The market solved it for them because by the time they finished that flip or the time they finished that condo conversion, even all the mistakes that they made have all been absorbed because the market was up 7, 8, 9, 10%, you know? So yeah, I mean, again, everyone's got to start somewhere, right? So I'm not going to default to the people that started in 2015, but they're going to learn what, you know, like I said, where the market downturn looks like eventually, you know, like I said. So yeah, I mean, it was a gift and a curse for me. That's it. There's a light in the dark. So started similarly too. Most people know that I did get hurt significantly in 2005, 2006, but it's more because I didn't understand real estate enough. I was still more finance than real estate. And when I first got in, you know, I got in with like a bad partnership and just because I was forcing myself into the business. And for those of you, you know, since we're doing this, I haven't never actually plugged this on the podcast yet. This was my story. Feel free. All the profits go to charity. So if you want to know my story on how I lost everything with $400,000 in debt to start real estate, feel free to pick up that book. There's my shameless plug. But I want to ask you, so when I got hurt with my credit. I got hurt with cash. I got hurt with everything. What would you tell people that are looking to try and start building their passive income streams, but they don't have great credit? They maybe aren't totally financeable. They don't have a lot of cash behind them. Like, what would you tell those people? No credit, not a lot of cash. Find good deals, find opportunities. You're the head of the snake when you find good deals, right? A lot of people, I hear that all the time. I don't want to get in because I don't have the credit score yet, or I'm still working on my credit. People work on their credit for decades and they never get it to where they want it to be. People save up for decades and never get the savings that they want to achieve. Find good opportunities. Someone like Nick, someone like myself are constantly looking for good opportunities. And if you're one who knows how to go out there and door knock and cold call and drive for dollars and mail marketing, and you can start with just a small $300 to $400 budget in terms of mailing, you can get out there and door knock on ugly homes for no money out of your own pocket, you know, at all. Find good opportunities and bring it to someone like a Nick or someone like myself and say, hey, how do I partner with you? I have this great opportunity. I'd like to come in. If it's a flip, if it's a buy and hold, I'd like to take 10% or 15% of the equity and learn the process with you. That's the best way to get in. And that's still really how I'm getting in, because it's not like I'm sitting on a ton of cash and I can just finance anything that I want, especially bonds. It's a super expensive market. So it's me going out and finding deals and then bringing the people in that I know that have money and mashing those two things together, right? And the spot I am in now, I have a pool of people who are lead generators and they go out and bring good deals. And I have a pool of people who don't have any time because they're doctors and lawyers and attorneys and dentists who work 90 hours a week, but they know they need to put their money somewhere. And my job is really the connector. I take those two people and connect them together and say, good deal, you know, good amount of cash. Let's bring these things together. But to answer your question, go out there and find good opportunities. Anything where it looks wrong, right? If everything else on the street is nice and this house is falling apart and the trees are overgrown and the grass is overgrown and the mail's falling out of the mailbox and the windows are broken and it's boarded up, that is a good opportunity. Find out who owns it, connect with that person. You are a real estate investor, tell them you want to buy it, put it under contract. And if you don't know how, reach out to a more experienced investor. And I'm pretty sure if you're going out there and hitting the streets, you can find somebody that'll work with you. Brilliantly said. And that is exactly what the path I took. Somerville, Cambridge, knocking on doors, 3-family buildings, talking to a lot of tenants. Yeah. You know, find the flipper that would do the kind of conversions when I started. And Somerville and Cambridge, that's where you want to be, you know. So that's where you want to be. That was a smart move. We have a couple of, quick questions that I like to kind of pose to some of the speakers, especially you. I'm curious, right? Well, I'm a man of routine and habits. So I'm curious, you don't have to be, but are there any specific daily habits or routines that you follow that you'd be willing to share? I wouldn't say daily. One of the things that I like about real estate is I'm always doing something different most days. I like the fact that I'm getting my hands dirty some days. I'm loading up a dumpster, and other days where I'm, crunching numbers. So that's one of the things I wouldn't say daily, but monthly and weekly Absolutely. So every month I would say I have my annual goals that I write down. And I used to do 5-year plans, but things change so quickly for me now. I mean, it comes at a rapid pace. I would encourage somebody who's brand new, put their 5-year plan in place. Me, I do annual goals and I say, what do I want to accomplish in 2020? And from that annual goal, I have monthly goals. I have monthly task lists and everything else. What do I want to do this month to achieve that monthly or that annual goal? And then from that monthly sheet, I just basically say, here are the things that I want to get done this week. And then I prioritize them as well. I don't just have a list of 20 different random things. I say, if I can just get these 2 things done today, these are my top priorities. These are my, must do's. I have my to-dos and then my must-dos. My must-dos, I have to get these done today. I try to get these done 5 o'clock in the morning, 6 o'clock in the morning, 7 o'clock, get those out of the way. And now I can tackle all the to-dos, right? The must-dos are, even if I don't get to the to-dos and I spend 3 hours on a ZBA call and all of a sudden my day is, completely off, I got my must-dos done and it's still a successful day. So I would say I'm still writing things down on a yellow legal pad. I'm kind of old school like that. I kind of like, having that physical list of things to do with me. But that's just it. It's just putting ambitious goals in place and then just attacking them, and to give you more specifics, part of what I'm doing right now, we talked about, outsourcing and virtual assistants and kind of putting operations in place is, I think the word of the month for June, or excuse me, July, is leverage, is people leverage. And my goal for this is to kind of get a bunch of things off my plate. Video marketing. I do a little bit of consulting as well, and I need somebody to kind of manage that side of my business for me. So kind of just putting people in place to manage the different aspects of my business.
Brilliant. That sounds like a lofty target and a good target is that Q3 or is that the rest of the year?
That's really the rest of the year. It's really just kind of freeing myself up. I'm doing, in my opinion, more than I need to be doing, right? I think I get it on the construction side. I was trying to do way too much in the beginning, and I get it now. I'm hiring pretty much everyone to do everything on the construction side and just managing the process. I need to do that more on the property management side, and then the consulting and, a couple other things that I'm doing as well is just putting people in place, trusting them, giving them a system, and kind of stepping back and saying, here are the things that you need to do with the things that are kind of repetitive,
Brilliant. Is there a passion project that you're working on right now, be it real estate or something else that you want to share with us?
A passion project. Yeah. So I mentioned to you before we hopped on, I'm really excited. Yesterday, we hopped off my first zoning board call. It took a lot longer than I expected, but we just got 4 rental units approved in the Mattapan area of Boston. So I am just excited right now to talk to the banker, get this thing going, be my first ground up project as well. I've done a lot of rehabs, a lot of gut rehabs, but this will be my first time that I'm actually taking down a structure, pouring a new foundation and going up, lovely 4-unit building. I'm really excited to get that started. So I'm all about real estate. I don't have too many hobbies. I know every time I hop on one of these, people are like, so what do you do outside of real estate? I'm like, real estate is it. I mean, if I'm not doing something in this business, I'm, hanging out with the kids or with the wife. But, I absolutely love this business. I think a lot of people get it intellectually, but I think you do have to have some type of passion for it, some type of love for the business for you to really kind of take off with it.
Or some would say obsession with the business.
Obsession. And I hesitate to use the word, but I would say I'm definitely obsessed. When I tell people that the first thing I do when I wake up in the morning is check MLS, and the last thing I do at night is check MLS to see, what's going on in my market. And it's not necessarily just because I'm, looking for deals. It's because I want to know what Nick has done in his market. What is he putting his deals out there for? What is he selling for? What is the next real estate agent listing that multifamily for? And it gives me a great education because when I go out and I do stuff in my market, I know my market inside and out. I know what a 3-family costs. I know what it costs to renovate it almost down to the dollar at this point. I know how long it's going to take. I know what it's going to rent for, precisely. I mean, that's because I'm relatively obsessed with it.
That's awesome. And for those of you in central part of the country or southeast, just so you know, zoning is a place that is there to block progress, at least up here. Up here, they're just known as you can't get anything through zoning board. So Willie just did something that was completely uncomprehensible. What is it? 3 years, you said? 2 years?
2 years, almost 2 years. We bought the place in beginning of, or the end of 2018. We're near, kind of just over 18 months, 19 months, 20 months, somewhere around there. It felt like an eternity, but it's a very tough process. You spend a lot of money before you even get a yes or no. You really have to commit to it. And it's the first time that I've taken it on, and proud of myself for doing it, a couple partners in it, proud of them for having, the patience to kind of go along and stick along with it. Long process. And we still have a little way to go. I mean, we might see another, when I say 2 years, because it might be another 4 or 5 months before we actually get permits to actually, put our shovel in the ground. Because now, even with the zoning board approval, we still need to go through the design board and make sure we're using the right materials and everything else. And then even once that's done, submitting everything to the ISD or inspectional services, going through the permitting process. And that might be another 3 months. So it is a long process, especially in the city of Boston. And I think any major city to get something built, but it's very rewarding. I think it's going to be very lucrative for us once we get that permit and once we are fully leased up.
Brilliant. Show us your book one more time, Willie, and then tell people how people can get a hold of you.
Sure. Again, Cash Flow Secrets, realwealthbooks.com. You can go there. It's coming out in September. You can pre-order now. I'm on LinkedIn, WJ Mandrell. I'm on Instagram, WJ Mandrell, Facebook, The Mandrell Company. And my website is mandrellco.com. It's MANDRELLCO.com.
That's fantastic. We will have all those in the show notes below, so feel free to take a look down below. Dude, what an awesome podcast. Any parting words for our listeners?
Hey, I just appreciate you having me on, man. We've been trying to connect for forever now, it seems. And, you're in your space doing big things. And I just appreciate you, you giving me the opportunity to kind of, tell my story.
I love it, man. We've literally been just going like this, doing our own thing. And finally,
right. Exactly.
20 years later, we connect up. It's awesome.
Yeah.
I love it.
No, I mean, I every time somebody's like, hey, do you know Nick? And I'm like, yeah, I mean, I do, but I mean, we've never actually, so it's great to, finally, dive in deep with you and have a great conversation. Hopefully this leads to, us doing some business together in the future.
We love that. And all the people here, definitely make sure you check out Willie's book. It's huge to have someone with his experience and his expertise looking to just help and better other people in his market. Like he mentioned, he and I are both here to kind of work with people. If they're not quite sure, if they don't have the resources, like come to us, like let us know what we can do to try to help out and get deals done. That's what we're here for. But
Absolutely.
Bottom line today, thank you so much, folks, for taking part in another episode of the Shut Up and Do It podcast, where we bring as much value as we can by bringing top quality guests and speakers, all who believe in a shut up and do it manner. Willie did not disappoint today. We talked about, pretty much everything. We talked about why $1 million isn't enough to use for retirement. We talked about his business model. We talked about what he's got going on and what he's passionate about. Willie, thanks for all your value today, man.
Honored. Like I said, thanks for having me on. I'm honored to be able to share kind of the information. And like I said, like you reiterate what you said, anybody who needs help, definitely reach out. On my website, you can get, a free coaching call, 30 minutes, and we can just talk about your needs, your specific needs. I'm available. So definitely reach out. And like I said, Nick, one last time, I appreciate you having me on.
No worries. It's awesome. Be sure to hit the like and subscribe buttons below to be notified of when we have new podcasts released. And for all the podcast episodes, go on over to shutupanddoitrealestate.com for all the former episodes. And also be sure we have our monthly trainings completely free. Be sure to like AA Real Estate Group on Facebook to get access to those free monthly trainings. They're, I think, the third Mondays of every month at 6 p.m. that are run by Matt. That's all we've got for today. So thanks for listening, and we'll see you on the next one.